Welcome back to my property investment education series. Today we commence taking a deep dive into the previous 4 videos, and today we discuss conducting due diligence and market research at a deeper level. Conducting due diligence and market research is critical in the property investment process to assess the viability and potential of investment opportunities, and doing this in an accurate way. Here's a comprehensive guide on how to conduct due diligence and market research effectively. And by conducting thorough due diligence and research, investors can minimise risk, identify investment opportunities, and make informed decisions that align with their investment goals and objectives and strategies. Stay diligent to leverage data-driven insights and continuously monitor market conditions to navigate the dynamic landscape of property investment successfully. First is you need to define your investment criteria. Begin by defining your investment criteria, including property type, location, budget, return on investment expectations, and risk tolerance. This will guide your research and help you narrow down potential opportunities in your desired areas. Consider market analysis, point 2. Consider it at a macro level analysis by doing research of macroeconomic factors such as GDP growth, employment rates, interest rates, inflation, and demographic trends to understand the overall health of the economy and its impacts on the real estate market that may have a bearing on the success of your property investment outcomes. Consider the micro level analysis and drill down into specific markets, sub-markets, to evaluate supply and demand at a local level. Consider the local dynamics of rental trends, population growth in a particular local government authority, job markets and economic stimulus, school districts, crime rates, and infrastructure development in an area at a micro level to understand how that area is actually performing. And consider that not only for the future, but consider that for the past. Point 3, property analysis. Consider your property types. Analyse different property types, residential, commercial, industrial, and their respective subcategories to identify the most suitable investment opportunities based on your investment goals, market conditions, risk, and financial capacities. Consider comparable sales and rentals. Research recent comparable sales and rental listings in the area, the target area, to benchmark property values, assess market trends, and determine price competitiveness. There's a number of different public domains that provide this data for you. If you're not sure, certainly reach out and we can provide you with additional information. Property performance metrics. Calculate key performance metrics such as gross rental yields, net operating income, cash on cash return, and a capitalisation rate if you're considering commercial, to evaluate the financial viability and potential returns of investment properties that you may be considering. Point 4, conduct market trends and consider market trends and forecasts. Historical data. Review historical data, market data, including sales trends, price appreciation history, rental rate history, vacancy rates, and absorption rates to identify patterns and trends over time. I've always said, if the numbers are correct and the numbers are publicly available and they can be tested and they're input correctly, the numbers never lie. Use forecasting tools. Utilise forecasting tools that are available in the public domain with regard to economic indicators, market reports, reserve banks, economists, from reputable sources to project future market trends, demand and supply dynamics, and investment opportunities. Consider your neighbourhood and sub-market analysis. Complete neighbourhood and understand your characteristics. Assess the neighbourhood amenity, proximity to schools, parks, shopping centres, public transportation, and other factors that influence property desirability and value. One of the key considerations for property investments is the exit strategy. So we need to make sure that we understand what property type we're looking to enter into. But does that property type have a desirable exit position also? That's crucial. Consider the supply and demand. Evaluate the balance between supply and demand in the neighbourhood and the submarket. Considering factors such as inventory levels, days on market and absorption rates are crucial for you to get an understanding of how quickly that property may move, or how quickly that property could be sold, or how long it may take to sell if you're wishing to divest. Understand, point 6 is that the regulatory and legal considerations. Understand government planning schemes and zonings and land use. Understanding zoning and regulations from local governments will give you an understanding of the land use restrictions, which again is publicly available. Building codes and permitting processes that may impact property development, property return, appreciation, and long-term opportunities via renovation or other usage outcomes. Consider environmental factors. Assess environmental risks such as contamination, flood zones, close to industrial areas, and geological hazards that could affect a property value, insurance costs, and the liability risks that may apply. Point 7, complete the competitive analysis. Understand your competition. Identify competing properties in the target market and analyse their pricing, their amenities, how their property compares to yours, the occupancy rates, and marketing strategies to assess the competitive landscape and position your investment effectively to maximise the potential return. A greater income is a greater yield, is a greater return. Understand market positioning. Determine how your investment property compares to the competing properties in terms of location, quality, amenity, the rental rate, the target demographic to maximise its appeal and marketability. Consider point 8, professional assistance. Don't try to do it alone. There is lots of people that can help you. We want to make sure that you're successful as a property investor. So consider seeking assistance from the real estate agents, property managers, valuation firms, inspectors, mortgage brokers, conveyancers and legal and other professionals with local market expertise and industry knowledge to supplement your research and due diligence efforts to make your property investment a successful outcome. I hope that's been a good session. It's a long session, but a good session. And we're on to the next deep dive subject. I'll see you then. Happy investing. Bye for now.